Hi, it's Richard Hemming here from Under the Radar Report. I'm doing a sector review and kicking off with consumer discretionary. These are retailers that benefit from improving consumer sentiment because the products they sell are not necessities. So on the ASX, you'd include JB Hi-Fi, Harvey Norman. Among these are names you'll probably be familiar with. The key profit driver for Wesfarmers is Bunnings, so we also include Wesfarmers in the list, the hardware store Bunnings. So the earnings of these companies can be highly cyclical, which means they ebb and flow according to economic conditions. Right now, when interest rates are at higher levels, lots of these firms will be finding it more difficult than at other times. Next, we move on to consumer staples. These are generally supermarket retailers such as Woolworths, Coles. They're able to churn out profits no matter what the economic conditions because the products they sell are necessities. So the big risk factor here is paying too much for earnings that rarely shoot the lights out. Then we get to energy. The biggest company here is Woodside Energy after it merged with BHP's energy assets in 2022. The biggest driver is energy prices, namely the oil price. But Woodside, even before its merger, was a leader in paying out dividends to shareholders. There is oil price risk, but there is increasingly also asset risk because investing in fossil fuels is getting harder, even for the big guns. So we move on to one of the big drivers of the ASX financials, namely the big banks. You cannot go past the big banks in financials. NAB, CBA, ANZ, Westpac, and now you'd also include Macquarie Bank or Macquarie Group. This is one of the big engine rooms of the ASX. The big driver here is the economy, specifically the domestic economy. When times are good, people borrow, the banks expand their balance sheet, expand their profits. When times are bad, people can't pay their mortgages, they default, so the bank's profitability suffers. These are highly cyclical, but also highly profitable. Then the other section in financials are the wealth managers or the wealth businesses. These are businesses that manage people's money or are associated with administration and settlements. The biggest one in the sector is the ASX, which is the listed entity that owns and operates the Australian Securities Exchange. Other examples you might be familiar with include AMP, Challenger, Insignia, and health insurance provider Medibank Private. The state of the investment markets is the big determinant of profitability with these companies. Then we get to healthcare. This is a great sector for getting earnings that don't relate to the general state of the economy, but you have to be careful about how much you pay for it. Just have a look at CSL's share price, which is the big operator in the sector. That's been struggling. They do blood-related products. It's well off its high for a number of reasons, which we cover in our Blue Chip publication. Industrials on the ASX, there are a wide variety. These include Transurban, Worley, Qantas. Drivers here are highly varied. Transurban's a toll road operator, pays consistent distributions. Worley, consultant in energy. Qantas, it's all about tourism. Then we move on to IT, information technology. This is somewhat of an underwhelming sector on the ASX when compared with the giants in the US market, famed for Facebook, Apple, Netflix, Google, now called Alphabet. There are big companies in this sector still, but we find small caps more exciting for exposure. We picked Afterpay early. We also have made money out of Macquarie Technology, to give you a couple of examples. Materials, in this definition we include manufacturing companies such as paper and packaging group Amcor, BlueScope Steel, building products companies James Hardie Industries and Boral. These are all companies whose products are sold globally and are leveraged to global growth and construction activity. We move on to metals and mining. Well, this is the other big engine room of the ASX from the bank, outside of the banks. These are the big miners. So basically we're talking BHP, we're talking Rio Tinto, we're talking Fortescue Metals, and South 32. There are other ones. But for all these stocks, the big driver is global growth. They're building a track record for paying dividends, but really their profits ebb and flow according to the big moves in global growth. So telecommunications, we get to an interesting sector because there's been so much consolidation. What's left? Telstra, TPG. Both well-run companies, but Telstra is still the gorilla. Earnings are highly consistent, but again, watch out for how much you pay. So real estate, this is a sector in transition. You might have exposure via your house, but it's important to obtain access to productive assets that actually pay income from differing tenants. We like Lendlease because it owns and develops property. It's not simply a passive investor. Lastly, we get to utilities. These are great ballast for any portfolio, often paying strong dividends, but you always need to be buying at the right price. I can't stress that enough. We've done well out of stocks like AGL Energy and the pipeline operator APA Group, but it's always good to remember that these companies, especially these companies, are vulnerable to disruption from more agile competitors, especially because they're associated with big structural change, like the transition to renewable energy. So I hope you've enjoyed listening to the sector rundown. I look forward to talking to you again soon. I'm Richard Hemming from Under the Radar Report.